The information provided in this communication is for informational purposes only, and does not constitute financial advice. It is important to note that past performance is not indicative of future results. Please consult with a qualified financial advisor to determine the suitability of any investment strategy.
Welcome back for another deep dive. This time, we're going to be looking at how a particular fund navigated 2024.
Yeah, should be pretty interesting.
Yeah, and we've got a bunch of really interesting documents we're going to be going through, and we'll get a glimpse into their thought process.
Yeah, it's not just the kind of dry financial data.
Right.
It's really a window into the minds of these investors who are grappling with some pretty significant world events.
Yeah, definitely.
Like from the explosion of AI
Right.
to the lessons we can still learn from giants like Warren Buffett.
Yeah, and the fall of Kodak.
Always a good reminder.
For sure. So I guess let's set the scene a little bit. 2024 was really the year that AI broke through, I think. Wouldn't you say?
Yeah, it really kind of hit the mainstream.
Yeah, and with that came this huge need for data centers, particularly in Asia and Oceania.
Yeah, that's right. And that really benefited companies like NVIDIA.
Right.
Because their GPUs became like essential to powering those data centers and developing AI. So that's a really tangible example of a technological advancement and, kind of how it ripples through whole industries.
Yeah, it's mind-boggling when you think about it.
Absolutely.
And while all this was happening, down here on Earth, space exploration was also making huge strides.
Yeah.
India's moon landing.
Big news.
New Zealand's growing role in the space industry. And it felt like we were really entering this new era of rapid advancement.
It did, didn't it? And that's really important, I think, for investors to remember. Technology is progressing so rapidly across all these different fields, and it's just crucial to keep an eye on that.
Absolutely. Speaking of keeping an eye on things, let's talk about Warren Buffett.
Okay.
He famously said, it takes 20 years to build a reputation and 5 minutes to ruin it. Pretty relevant to investing, I think.
Yeah, absolutely. That's a timeless principle, isn't it? Reputation, integrity, it's all part of ethical decision-making. And this fund really seems to emphasize that.
Yeah, and you'll see that as we go deeper. Because reputation is everything, especially in the financial world.
Yeah, that's for sure.
But now for a different kind of lesson. Let's talk about Kodak. The classic Kodak moment.
Okay.
Sadly for Kodak, it became the Kodak miss when they failed to adapt to the digital photography revolution.
Yeah, it's a bit of a cliche in the business world now, isn't it?
Yeah.
This cautionary tale of, once dominant company failing to innovate and ultimately fading away.
Yeah.
And we've seen it with Nokia, Blockbuster, countless others. It's interesting this fund actually uses Kodak moment as a term.
Right.
Almost like a warning sign, I guess.
Right.
To avoid repeating those mistakes.
Don't become the next Kodak.
Exactly.
Right. Okay, so with those lessons in mind, let's get into some specific investments. It turns out this fund initiated a position in Alphabet, Google's parent company, back in April 2022.
Okay.
They were particularly interested in the potential of Google's cloud business.
Right.
They felt it was undervalued at the time.
Yeah, that was before the AI boom really took hold.
Right. Yeah, their timing seemed pretty good.
Yeah, it did.
Then in July of 22, they had a stock split and a share buyback.
Right.
So both of those seemed to validate the fund's decision.
Yeah, that's right.
But then OpenAI boosted onto the scene.
Oh.
And the market started to get a little bit jittery about Google's dominance in search.
Yeah, understandable.
Share price dropped over 30%.
Ouch.
A significant hit.
But,
so what did the fund do?
Well, they doubled down.
Really?
Increased their position in Alphabet during that dip.
Wow.
Showing real conviction in the company's long-term potential.
They really believed in it.
Yeah, they really did.
So they weren't worried about Google going down without a fight.
Exactly.
And Google didn't disappoint. They launched their own powerful AI model, Gemini.
Right.
Designed to compete head-on with OpenAI.
Yeah. And then there's the rise of the Google Pixel, too.
Right. The Pixel went from being kind of this niche product to a legitimate flagship phone challenging Apple and Samsung.
It's amazing how quickly that happened.
It really is.
And that just shows Google's ability to adapt and innovate in a competitive market.
Yeah, they were not going to let that Kodak moment happen.
Exactly.
Now, while we're on the topic of Google, I got to share this. Did you know that YouTube was initially conceived as a dating platform?
Wow. I did not know that.
Talk about a transformation.
That's incredible.
Yeah. So after Google acquired YouTube,
Why?
they completely reimagined it
Yeah.
and transformed it into this global media powerhouse we know today.
And then the YouTube Partner Program was brilliant.
Right.
Empowering creators and fostering this whole new economy around online video.
Who would have thought?
Pretty incredible.
But let's move beyond individual products now.
Okay.
And let's talk about how this fund analyzes businesses as a whole.
Okay.
They use this fascinating framework called the core engine.
I like that.
Yeah, and it looks at 5 key elements.
Okay.
Fuel, pressure, balance, humanity, and spark.
It's a very holistic approach.
Yeah.
You know, it goes beyond just crunching numbers.
Right.
And when you apply it to Google, it's really interesting.
So let's start with fuel. What's powering Google's engine?
Well, they've got an exceptional team, visionary leadership,
Right.
and an incredibly diverse product portfolio. That's pretty high-octane fuel.
Right.
But like any engine, there's pressure.
Yeah.
Competition is fierce.
Yeah.
And those antitrust concerns we mentioned earlier,
Right.
definitely adding to the pressure. It's a lot to juggle.
It really is. So they've got the fuel and they're facing the pressure.
Mm-hmm.
But how do they find that balance, in such a dynamic environment?
Right. Well, they've been strategically investing in cutting-edge technologies like AI and quantum computing.
Makes sense.
It's all about diversifying their revenue streams and not just relying on search advertising.
Right.
And then they're also exploring new territories with ventures like YouTube, Waymo, their self-driving car company, and even some healthcare initiatives.
It seems like they're always looking for the next big thing.
Yeah.
Which, makes sense if you want to avoid that Kodak moment.
Right.
Absolutely.
But balance isn't just about the finances, is it?
No, that's right.
There's also that humanity aspect.
Yeah.
What's that look like for Google?
Well, it's about leadership.
Okay.
Company culture, commitment to attracting and retaining top talent. Google has a reputation for fostering a really creative and innovative work environment.
Right.
And their leadership, particularly under Sundar Pichai, has been praised for, its ethical approach and focus on long-term sustainability.
Okay.
And then there's DeepMind.
Oh, yeah.
Their AI subsidiary.
Yeah.
Which recently had a co-founder win a Nobel Prize.
Wow.
So that's a pretty impressive humanity boost.
Talk about a flex. Okay, so we've got the fuel, we're managing the pressure, finding balance, and we've got that strong sense of humanity. But what about the spark?
Okay.
What is it about Google's business model that really ignites it?
Their spark lies in their ability to offer high-quality products and services for free.
Right.
Attracting this massive user base and then leveraging that scale for advertising revenue.
So think about it. Search, Gmail, Google Maps, Android, all free to use.
Yeah.
Incredibly popular.
It's brilliant.
It is, but it is attracting scrutiny.
Yeah, those regulators.
Right.
As we talked about earlier, that potential forced sale of Chrome is a big deal.
Right.
So how does the fund view that threat?
Yeah, it's definitely a concern. It raises questions about, the balance of power in the tech world.
Right.
And whether breaking up a successful company actually stifles innovation or truly levels the playing field.
It's a tough one.
Yeah, and some argue that it could just shift market dominance to another player without really addressing the underlying issues.
Yeah, it's a complex situation for sure. It highlights the challenges of regulating this rapidly evolving industry.
It really does.
But let's shift gears a little bit here.
Okay.
And explore something a little more personal.
Yeah.
The fund manager's own investment journey.
Okay.
Their story might resonate with a lot of listeners.
Yeah, for sure.
Especially those who are just getting started.
Yeah, it's a reminder that everyone starts somewhere.
Right.
And even the most, seasoned investors
Yeah.
face challenges and make mistakes along the way.
It's all part of the journey.
Absolutely.
So we talked earlier about how the fund manager faced those high brokerage fees early on in New Zealand.
Right.
Which was a common obstacle for smaller investors back then.
Yeah, and then platforms like Sharesies came along and really changed the game, made investing much more accessible and affordable.
Yeah, it really opened up opportunities for a whole new generation of investors.
Yeah, it was huge.
And the fund manager's early investments, companies like Napier Port and Pacific Edge, they represent that mix of, wins and losses that every investor experiences.
That's right. You learn as you go.
Right.
And adapt your strategy along the way.
So speaking of adapting, how is the fund manager navigating the current market landscape?
Right, because things are changing so quickly right now.
It's tricky.
Yeah, it's a tricky time to be making big investment decisions.
So they're definitely aware of the challenges. They're anticipating reductions in the official cash rate, OCR.
Okay.
That's the interest rate set by the central bank.
Yeah.
And these reductions can stimulate the economy, which is good.
Right.
But they can also lead to inflation.
Right, which is not so good.
Exactly. It's a delicate balance.
So how are they mitigating those risks?
Well, they're emphasizing the importance of being selective in this market environment. With valuations high, it's crucial to identify companies that have a solid foundation.
Right.
A clear vision for the future.
Yeah.
And a commitment to ethical business practices.
It sounds like they're taking a page from Warren Buffett's playbook.
Yeah.
Be patient, be selective, and invest in companies you believe in for the long haul.
Right. And they're not afraid to explore new opportunities either.
Okay.
We mentioned earlier their interest in sectors like warehousing, transport, power, and supermarkets.
Right.
So what's the rationale behind that? Well, these sectors are essential to the functioning of any modern economy.
They are.
Think about it. With the continued growth of e-commerce,
right,
the increasing demand for global trade, energy, and even basic necessities like food.
It's all crucial.
Yeah, these sectors are well positioned for long-term growth.
Yeah, I see.
The fund sees potential there, especially as they try to diversify their portfolio and find those hidden gems that others might be overlooking.
So it's not just about picking the hottest tech stock or the latest trend. It's about understanding, the underlying forces that drive the economy.
Yes.
And identifying companies that are well positioned to benefit from those trends.
Exactly.
It's like being a detective.
Yeah.
You got to look for clues and connect the dots.
And be willing to adapt and evolve as the market changes.
Yeah.
That's a lesson I think we can all learn from the fund manager's journey. They haven't been afraid to shift their strategy, embrace new technologies, and even challenge their own assumptions.
And that's how you avoid the Kodak moment, isn't it? Being open to change, willing to learn, and constantly adapting to this, ever-evolving landscape.
It's about embracing the unknown.
Yeah.
Seeing challenges as opportunities.
I like that.
So as we start to wrap up our deep dive into this fund's journey through 2024, it's amazing to see how everything we've discussed connects.
It is.
From the rise of AI and space exploration to the challenges of antitrust regulation and the importance of ethical decision-making.
Yeah, and the fund manager's personal journey, with its early struggles, lessons learned, and adaptation to new technologies.
It's all intertwined.
It really is. It's a complex and ever-changing world, and the only constant is change itself. But by embracing that change, by being willing to learn and adapt, and by making decisions that align with our values, we can navigate this landscape and create a better future.
Yeah, it really is remarkable how much we've covered today. We've gone from, the frontiers of space exploration to the nuts and bolts of investing.
It is pretty amazing.
And woven in those, timeless lessons from figures like Warren Buffett. And the cautionary tale of Kodak.
Always a good one.
It's all connected.
It is, isn't it? And I think that's one of the key takeaways from this deep dive, that the world is just so complex and interconnected. And understanding those connections is really crucial for making informed decisions.
For sure, whether you're managing a fund or just managing your own life.
Exactly.
It's about seeing that bigger picture.
Yeah.
Understanding the forces at play and being able to adapt and evolve as those forces shift.
And that brings us back to one of the most intriguing aspects of this whole deep dive, the core engine framework.
Oh, yeah.
This approach to analyzing businesses by looking at fuel, pressure, balance, humanity, and sparks.
It's so insightful.
Yeah.
But it's also surprisingly applicable to our own lives.
Isn't it?
I was thinking the same thing. It's like a personal SWOT analysis. But with a much more dynamic and engaging twist.
Exactly. It's about asking yourself, what fuels my passion? What pressures am I facing? How am I balancing my responsibilities with my aspirations? Am I acting with integrity and compassion? And what's the spark that ignites my purpose?
Wow, those are powerful questions.
They are, aren't they?
Yeah, and by applying this framework to our own lives, I think we can really gain a much deeper understanding of our own strengths and weaknesses and the opportunities and threats that surround us.
Yeah, it's a tool for self-reflection and growth, for identifying what drives us and how we can navigate those challenges and complexities of life, with purpose and intention.
Makes sense.
It's about taking those lessons from the business world, from companies like Google and Kodak, and applying them to our own personal journeys.
So as we wrap up this deep dive, we want to leave you with one final thought-provoking question to consider.
Okay.
How can you apply the core engine framework to your own life?
Yeah, think about it.
What are your fuels, your pressures, your balances, your humanity, and your spark?
We encourage you to reflect on these questions.
Yeah.
Explore your own personal core engine.
Right.
And use these insights to make informed decisions, to embrace change,
Right.
and to live a life that is both fulfilling and impactful.
It's been an absolute pleasure exploring these ideas with you today.
Yeah, thanks for having me.
We hope you gained some valuable insights from our journey through this fascinating collection of documents.
Thank you for joining us on this deep dive.
And until next time,
Keep learning.
keep adapting.
And keep that spark alive.